Did you know that 90% of the world's millionaires made their wealth through passive income? That's right. While most people are stuck in the 9-to-5 grind, there's a small group of people earning money while they sleep. What if you could join them? The good news is, you don't need a huge fortune to start. In fact, you can begin today with just a little knowledge and smart choices. Passive income isn't just for the rich, it's for anyone who wants to make their money work for them. But where do you begin? What's real and what's just noise? In this video, we're diving deep into 6 passive income streams that actually work, with strategies that most people overlook. No fluff, just actionable tips to help you build wealth over time. From earning money through dividend stocks to investing in real estate without owning property, you'll learn how to make your money grow on autopilot. Stay tuned, because the truth might surprise you. Chapter 1. Dividend Dynamos. Building a stock portfolio that pays you forever. If you're looking for a way to earn passive income without having to constantly check your investments, dividend stocks could be your ticket. These stocks pay you regularly, often every quarter, just for holding them. The key to success here is choosing companies that are financially stable and have a history of increasing their dividends over time. Warren Buffett, one of the most famous value investors, swears by the power of dividends. In his annual letter to Berkshire Hathaway shareholders, he said, "Our favorite holding period is forever." That's the mindset you should adopt when building your dividend portfolio. Studies show that over 40% of the stock market's long-term returns come from reinvested dividends. If you're in it for the long haul, dividend reinvestment is a game-changer. Companies like Coca-Cola, Johnson & Johnson, and Procter & Gamble are prime examples. These companies not only offer consistent dividends, but they also increase their payouts year after year, ensuring your income grows too. But how do you find the right dividend stocks? Look for companies with a solid track record, a reasonable payout ratio, and a healthy balance sheet. Aim for stocks that yield 3% or more, but remember, higher yields sometimes come with higher risks. A 5% yield from a strong company is far better than a 10% yield from a shaky one. The beauty of dividend investing is its simplicity. As long as you focus on stable companies, the passive income flows in, and your portfolio continues to grow, especially when you reinvest dividends. Think of it like planting a tree that keeps giving fruit year after year. Chapter 2. The Power of Real Estate Syndications. Passive income without the landlord headache. Real estate is one of the most popular passive income strategies, but traditional ownership can be a headache. Enter real estate syndications. This strategy allows you to invest in large-scale real estate projects without having to deal with tenants or maintenance. A real estate syndication is essentially a group of investors pooling their money to purchase commercial properties like apartment complexes, office buildings, or retail centers. In exchange for their investment, each investor receives a portion of the property's rental income and eventual profits when the property is sold. The returns can be quite attractive. On average, investors in real estate syndications can earn anywhere from 6% to 12% annual returns. This is a mix of cash flow from rent and appreciation from the property's increasing value over time. Real estate has historically outpaced inflation, and it's often considered a safe haven during economic downturns. What makes syndications especially appealing is that they allow you to diversify your investment portfolio. Instead of putting all your money into stocks or bonds, you can spread it across real estate projects in various locations, reducing risk and enhancing returns. Plus, many syndications allow you to get started with as little as $10,000. It's crucial to do your due diligence before jumping into syndications. Look for experienced sponsors who have a proven track record. Also, make sure to assess the property's location and the financial stability of the market. Sites like CrowdStreet and Fundrise allow you to browse different opportunities and start investing with ease. By investing in real estate syndications, you're setting up a long-term passive income stream, without ever having to manage a single property. It's a fantastic option for those who want to take part in the real estate market but don't want the headaches that come with being a landlord. Chapter 3. Peer-to-peer lending. How to make money by being the bank. Peer-to-peer, P2P. Lending is one of the most exciting new ways to generate passive income. With P2P lending, you're essentially acting as a bank. You lend money to individuals or small businesses, and in return, you earn interest on your investment. The best part? You can do all this without ever leaving your couch. The concept behind P2P lending is simple. Platforms like Lending Club and Prosper connect borrowers with lenders. The platform acts as the middleman, screening borrowers for creditworthiness and ensuring that everything is legal and secure. As a lender, you can choose which loans to fund based on the interest rate, loan term, and the borrower's risk profile. The returns on P2P lending can be quite high compared to other forms of passive income. On average, lenders can expect annual returns ranging from 5% to 10%, depending on the risk level of the loans they fund. Of course, higher returns come with higher risks, so it's important to diversify your lending across many different borrowers to mitigate potential losses. A unique feature of P2P lending is that it can be a great way to help people who might not qualify for traditional loans. Whether they're entrepreneurs looking to grow their business or individuals seeking to consolidate debt, you're helping people while earning interest. In a way, you're becoming a part of the community's financial ecosystem. The key to success in P2P lending is risk management. You should never put all your money into a single loan. Instead, spread your investment across many loans to lower the impact of any defaults. Some platforms even allow you to automatically invest in a diverse range of loans, saving you time and effort. P2P lending platforms often offer tools to help you track your investments, see your returns, and make adjustments as needed. So if you're looking for a way to earn passive income with a bit more involvement and the chance for high returns, P2P lending could be the perfect fit. Remember to subscribe for more great tips on building your wealth through smart passive income strategies. Chapter 4. The Right Revolution. Investing in real estate without buying property. Real estate investing is a tried and true way to create passive income, but not everyone has the capital or interest to buy property. That's where real estate investment trusts, REITs, come in. REITs allow you to invest in real estate without owning property directly. These publicly traded companies own, operate, or finance real estate projects, and they pay you a portion of the rental income they generate. REITs are great because they offer a high level of liquidity compared to direct property ownership. You can buy and sell shares of REITs on the stock market just like any other stock, meaning you can easily adjust your investments if needed. Plus, most REITs are required by law to pay out at least 90% of their taxable income in the form of dividends, which makes them an attractive option for passive income. The returns on REITs vary depending on the type of properties they invest in. Residential REITs might focus on apartment buildings, while commercial REITs invest in office buildings and malls. Historically, REITs have offered solid returns, with some yielding around 8% to 12% annually, making them an appealing option for those looking to diversify their passive income streams. However, like all investments, REITs come with risks. Changes in interest rates and property values can impact their performance. Still, they provide a way to invest in real estate without the hassle of managing tenants, repairs, and maintenance. Chapter 5. Building your own private label brand. Earning income while you sleep. Another exciting way to create passive income is by building your own private label brand. This method involves sourcing products from manufacturers and selling them under your own brand name. The beauty of private labeling is that you can sell products without having to create them yourself. Many people are turning to platforms like Amazon to launch their private label brands. With over 300 million active users on Amazon, the potential for sales is massive. The key to success in private labeling is choosing the right product, a product with demand, low competition, and good profit margins. Once you've found a winning product, you can scale your business by automating processes like inventory management, shipping, and customer service. With the right strategy, you can earn money 24/7 while your product sells itself. Chapter 6. The Boring but Profitable World of Bonds. How to generate income safely. Bonds may not be the most exciting investment, but they are one of the safest ways to generate passive income. When you buy bonds, you're essentially lending money to a company or government in exchange for periodic interest payments. Bonds come in many forms, from corporate bonds to government bonds, and they're often used by investors seeking more stability and less risk. The average return on bonds is typically lower than stocks, but they provide a predictable, steady income stream. Bonds are especially useful during times of economic uncertainty. Investors flock to bonds when the stock market is volatile, as they are less prone to dramatic swings in value. Government bonds, like U.S. Treasury bonds, are considered one of the safest investments, while corporate bonds may offer higher returns at the cost of increased risk. In either case, bonds are an essential part of any diversified passive income strategy. Subscribe now for more valuable tips on how to grow your wealth with smart, safe, and scalable passive income ideas. These 6 passive income strategies are just the beginning. Whether you're looking to dive into dividends, real estate, P2P lending, or bonds, each method provides a unique opportunity to grow your wealth with minimal ongoing effort.